Welcome back to the Stock Market Summary series. We've seen an absolutely fascinating day in the markets, really a study in contrasts.
Definitely.
On one hand, you've got the NASDAQ not just hitting fresh highs, it's launching into new all-time territory. I mean, a real triumph for tech.
Right.
But then you pivot and look over at real estate, and wow, it's had a pretty dramatic stumble, almost like hitting an air pocket.
Yeah, quite the drop.
There's this sharp divergence playing out right now, and we're going to unpack why these wildly different moves matter, what they might tell us about navigating today's landscape, and how it all fits into the bigger picture for you.
Sounds good.
So stick around, because we're going to get to the heart of what's truly driving these markets. Before we jump in, just a quick friendly nudge. If you find these daily summaries helpful, hit that like button. It doesn't cost you a thing, but, well, it helps us out immensely.
It really does.
And click that subscribe so you never miss a beat. You can always unsubscribe later if you don't want these updates. And just a reminder, everything we discuss here is for general market commentary and trading education only. Nothing in this report constitutes specific buying or selling advice.
Absolutely. So today certainly felt like the market was taking a much-needed breath after yesterday's explosive rally.
Yeah, definitely felt that way.
It was less about, clear direction and more about consolidation. Ended up being a distinctly mixed bag across the board.
Mm-hmm.
Really shows you the underlying cross currents at play beneath the surface. Paints a picture that's anything but straightforward.
Indeed. And when we dive into the major indices, the NASDAQ, which, wow, has been the runaway leader, it edged up another 0.26%.
Still climbing.
Right, this isn't just a small gain. It pushed us into fresh all-time highs. It just signals that the appetite for tech, particularly AI stuff, remains, well, insatiable.
It seems like it. The S&P 500, however, largely stayed flat, just hovering near its peak from yesterday's pretty impressive 1.1% surge.
Kind of holding its ground.
Exactly.
Yeah.
Like it's waiting for, broader confirmation before really joining the party again.
That's a good observation. And while the S&P consolidates, you look at the Dow Jones, our industrial bellwether, it dipped a slight 0.22%.
Just a little pullback.
Yeah, and this comes after it popped above its 200-day moving average yesterday, which was, technically notable.
Right.
So seeing it pull back after hitting such a key level maybe suggests a retest. Or perhaps just a bit of investor hesitation about, the sustainability of that move.
Makes sense.
And then you have the Russell 2000, our small cap indicator, that slid a more significant 1.17%.
Ouch. Yeah, that's a bit more telling.
It often tells us about the health of the broader economy, beyond just the tech giants. Small caps tend to be more sensitive to domestic conditions.
Oh, so this decline could signal some underlying profit taking. Or maybe, just maybe, an early warning of reduced risk appetite among traders looking for, quick gains.
It's those subtle shifts that really tell the story, isn't it?
Absolutely.
Let's dig deeper into those sector moves then, particularly that striking contrast we saw today. Technology, XLK, it led sectors with a modest gain, like we just talked about with the NASDAQ. Still the market's darling, it seems.
Bigly.
But then, as you mentioned, real estate lagged significantly, tanking a notable 2.44% today.
A big drop there.
And this wasn't entirely unexpected, right? For
Yeah.
those watching, we discussed yesterday that its rejection of the 200-day moving average was a potential trouble spot. We said it could get slippery and fast.
I could flag that, yeah.
So what exactly does that technical rejection mean for real estate investors right now?
Well, that rejection at the 200-day moving average wasn't just a technical blip. It was like the market hitting a concrete wall. That 200-day line, usually a strong support level for upward trends, it instead became a firm ceiling today. It tells us the selling pressure is significant. It's dominant right now.
Okay.
It means the price tried to push above that key long-term average, failed decisively, and then reversed pretty quickly. It's a classic signal that the path of least resistance for real estate, for now at least, is downwards.
Right.
Suggests any upward momentum has been thoroughly rejected. For anyone looking at that sector, it's a clear warning sign. Exercise caution.
Okay, let's unpack this with some specific stocks maybe, because these broad sector moves, especially that tech real estate divergence, they play out vividly in individual stories. NVIDIA, for instance.
Oh, yeah, indeed.
Rocketed to new all-time highs today, broke out of what traders call a high base pattern. It's just been an absolute powerhouse, almost defying gravity. Can you quickly explain the significance of that pattern?
Sure. A high base pattern for those watching specific setups is incredibly significant. It happens when a stock has already made a substantial move higher.
Yeah.
But instead of correcting sharply, It forms this relatively tight, flat consolidation pattern near its highs.
Okay, kind of digesting the gains.
Exactly. It signals that big institutional buyers are still holding strong, and that new demand is absorbing any selling pressure even at these elevated levels.
Got it.
So when a stock then breaks out of that tight base, like NVIDIA did, it often indicates a fresh surge of buying interest. It can lead to another powerful leg higher. NVIDIA is just a textbook example today. Remarkable strength.
On the complete opposite end of the spectrum, though, Duolingo
Oof, yeah.
continued its brutal sell-off. On heavy volume, too, just as we kind of warned about yesterday. It's been a painful ride for anyone caught in that.
Absolutely painful.
This really underscores the crucial need for, well, tight risk management, doesn't it?
It absolutely does. Seeing a stock like Duolingo get hit so hard, just dropping relentlessly day after day, it's a powerful reminder. Even in a strong overall market, individual stocks can quickly turn against you. That's why having disciplined setups, knowing your entry and exit points, and understanding how to keep losses small is just paramount.
So crucial.
It's not about being right every time, right? It's about being disciplined when you're wrong. Learning to implement these strategies like setting stop losses, managing position size, that's what separates consistent traders. It's a core principle we teach, equipping yourself to let winners run and cut losers fast. Echoes Tom Hugard's best loser wins idea. Be the best at managing mistakes, not just picking winners.
That makes a lot of sense.
And these are precisely the kinds of practical techniques we dive into much deeper in our Grok Trade mentorship program.
And speaking of those individual stock stories, by the way, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments. We might cover it in an upcoming session.
Yeah, definitely let us know.
Okay, now let's talk about the world of crypto and metals. Bitcoin, actually, against this backdrop of economic jitters. It's been quite interesting.
It has, yeah.
Stacked its third consecutive positive day. Climbed about 1.44% today. That's a notable move, considering the broader uncertainty.
Yes, and what's fascinating here is the technical development. Bitcoin has successfully regained ground above its 20 and 50-day moving averages.
Okay. Key levels.
Very key short and medium-term trend indicators.
Renewed buying interest, perhaps?
So potential for more upside.
Potential, yes. But a word of caution, as always with crypto. If Bitcoin truly breaks higher from here, it could really run without you if you're not prepared.
Moves fast.
Very fast. So you need to stay sharp, be ready if you're looking to engage. It's a market that rewards quick action when it shows its hand.
Got it. And in the precious metal space, how are gold and silver looking amidst this mixed bag of market signals? Are they finding their footing as safe havens?
Well, gold ticked up about 0.3% today. It's trying to find support right at its rising 50-day moving average.
Okay, important level. Crucial for gold's intermediate-term trend. Holding it would suggest resilience. Silver, too, gained a solid 1.23%. Building on yesterday's momentum after it, wedged down to its rising 20-day moving average.
So both trying to hold key spots.
Exactly. We're monitoring both closely for potential bounces if these key technical levels continue to hold.
So to sum up today's action, really a mixed pause after yesterday's big moves, showed some stark divergences.
Definitely.
We saw the QQQ hitting new record highs powered by tech. Meanwhile, real estate stumbled significantly, and Bitcoin gained some serious bullish traction technically.
Good summary.
And remember, have a ticker you want us to break down, drop it in the comments. We love seeing what you're watching.